obviously 2020 and into 2021 has still been very challenging, with a whole host of new threats emerging, and they've quickly vaulted up the importance ladder for a lot of institutions. Just as one example, third-party risks and supply chain security risks have really never deserved more attention than they do right now, right? Are there any other risks that you would call out, or what are some of the top things financial institutions can do to mitigate some of those types of risks today?
Yeah, well, let's first of all just talk about third-party risk, and especially in the banking industry. I mean, that's always been a high risk priority for banks. Although it's interesting, Dan, in terms of seeing the different tiers of banks in terms of their relationships with essentially what we call significant service providers, vendors that are essentially supporting core banking services for an organization. Now, it's interesting because the larger banks, and certainly the largest banks in the United States, are still doing most of those core banking services themselves. Albeit, of course, they're very dependent still on third-party vendors. And I'll give you one example: internet service providers. As I mentioned earlier, when the pandemic started, internet access, whether it's through your mobile device or through your web browser, became more important than ever to be able to sustain that effectively for bank customers. And so, yeah, obviously a lot of concerns in terms of like evolving denial of service attacks or attacks going after internet service providers or anything associated with internet-related network services, was certainly going to be of concern. It continues to be a concern for our largest banks. Now, our smallest banks, down to including like some of the smaller credit unions and all, it's interesting because they typically outsource most of their core banking services to a significant service provider. So they don't necessarily have their own data center at all. So they're even more reliant on these significant service providers. And the Federal Reserve, we do monitor these SSPs quite closely because there is a possibility of concentration risk in which if one SSP were to experience some sort of cyber attack that would cause a sustained outage, obviously that would impact a broad swath of small banks across the country. So we're very, I think, attuned to the concentration risk associated with SSPs. And Dan, by the way, one of the things that we've been looking at recently too is when we talk about third-party vendors, we include cloud service providers. Pretty much all the banks I'm seeing are on a journey, albeit at different paces, in moving towards using the cloud and cloud platform services. Initially, it was for not critical services, but now there's a slow but steady, I think, progress towards core banking services now relying on the cloud and the cloud platforms. And one of the metrics I found interesting that the Federal Reserve has been monitoring is that it's really only 3 or 4 cloud service providers that most banks are migrating to. So again, there's that potential for concentration risk. Even though we recognize there's a lot of benefit for banks in terms of using cloud infrastructure, there's also new risk emerging from that in terms of concentration risk. And then, of course, banks, whether it's working with a significant service provider or with a cloud service provider, even though they're essentially outsourcing tasks, there's still a need to provide a certain level of support and configuration. There's certainly a level of responsibility that banks' IT and security have to make sure that these new outsourced platforms and services are still secure. And with cloud, it's interesting because it's still relatively new for everyone in terms of how exactly do you securely set up and configure and maintain cloud platforms to support critical services. So I think these are some of the things that we're certainly seeing and tracking, especially with regards to third-party risk.